Hello, it's Adil, Mr. Intermarket Analysis, bringing you a review of the FTSE 100 for Thursday's trading, the 16th of January 2014. Okay, so interesting week so far. Let's just, well, the last 48 hours have been more than interesting. Obviously, en masse sell off and then en masse rally. Negating negating all the bearish move that we've had. Obviously, all the charts have now negated all the bearish engulfing candles, so I'll just show you. Okay, so the FTSE obviously didn't have one anyway. The one that we were really concerned about was the French CAC. Okay, red candle here, negated. Upper body was 4310 taken out. I was stopped out on that in the afternoon today, minus 40. Okay, and let's have a look at the German DAX. Okay, we had a bearish, a bear flag formation, shall we say. Okay, so bear flag. Expected the gaps below to close. Obviously negated the bearish engulfing candle as well, and obviously has made a new high, testing the upper channel resistance. Okay, so there's a lot of candlesticks out there. Also the Euro stocks as well, that's certainly negated. Even the Dow Jones has negated. And the semiconductors obviously making a new high. So interesting times. Now the concern that I have is that the Shanghai index is still negative overnight. So again, that's giving us alternative signs or signals. Although the Nikkei obviously did reverse powerfully, given the fact that even though the yen hasn't really strengthened as such, especially the Euro Japanese yen. So there's a lot of divergences as well, such as the Aussie as well. The Aussie has been inherently weak compared to its peers. So if you look at the chart of the Aussie USD, as you can see, it's in the doldrums. I do have a short position because we've got a failed inverted head and shoulders pattern, and we should go back and retest the lows overnight, so that should be an interesting trade there as well. So basically the summation really is there's a lot of confusion, especially given the fact that today we had, if I just discuss the fundamentals. Okay, so for the FTSE 100, okay, inflation data wasn't as high as expected. We obviously got the rally with regards to that. We closed that gap in my last video. Okay, and then obviously we were expected to pause given the fact that US inflation data that came out today, and obviously all the data that came out as well was confirming that tapering was back on. It negated the weak jobs report last Friday. Obviously, given the fact that 75,000 jobs were created, all the QE junkies got back on the buy the dip bandwagon. Okay, expecting tapering to be delayed. Obviously, retail sales data did come out came out pretty decent in accordance with market expectations, and wasn't a shocker. Okay, even today's data came out above expectations, and adding the fact that inflation is certainly not tepid, it came out higher than expectations. Again, that confirms the US dollar strength. Okay, so if you look at the US dollar, I've been a bull on the US dollar this year, definitely this year, and I continue to do so. Okay, if you look at the US dollar index, what pattern do you see there? Inverted head and shoulders formation, and there's your tapering gap above that needs to be closed. Okay, so keep an eye out for that for obviously 2014. That's one of the reasons why I've gone long on the USD JPY as a swing trade, targeting the 105 level, 105.65, currently plus 100 points on the USD JPY trade at the moment, although I am down negative on the CAC trade at present, although I do expect that to come into fruition over the next few days. So okay, so yeah, keep an eye on that for that with regards to that. So given the fact that fundamentals signaled taper on, that obviously should have created a risk off environment. Okay, given the fact that obviously yes, the FTSE had rallied to 6,800, and basically all the good news was now baked into the cake. Okay, the market had other ideas. Okay, so now let's have a look at the FTSE chart itself. Okay, so the inflation, a lower inflation has certainly been penciled in. That's been factored in now. Okay, given the fact that you got lower inflation, that obviously has caused sterling to drop. Sterling has been weak ever since. If we go to a chart of sterling, we can bring that up. Okay, certainly you can see that drop there ever since the inflation data came out. Okay, yesterday and going into today. Okay, so weaker inflation, obviously that gave the catalyst then for the exports to be reignited. Okay, the export sector, Euro GBP Euro GBP. Okay, so keep an eye out for that. Okay, so that certainly gave the catalyst for the FTSE to close the gap above. And if you look at the weekly chart of the FTSE itself, we are into resistance. Okay, so keep an eye out for that. That's a level we still have yet to confirm and close on the weekly chart, so bear in mind this candle here right now is still a weekly candle, so we could still see a negation or a reversal in the opposite direction, so bear that in mind. Okay, but for now certainly has broken the key trend line resistance. We've got horizontal resistance here at 6820, and the next key pivotal resistance will be 6870. Do I expect the FTSE to go and break that? Very hard for me to envisage that at present. Okay, given the fact that the taper on scenario is certainly prevalent in the market, and we've had a lot of Fed members coming out and being hawkish, so it's very hard for me to see that. Okay, very hard for me to see that, especially given the fact that oil has been hammered recently, although it has picked up today. It did certainly make a comeback today, a $2 comeback. Gold certainly is subjugated, still remains subjugated. Even with that higher inflation data, it did have an uptick, but not sufficient enough, although copper did make a good move higher, but again stuck at resistance. Okay, so these are all things that we certainly need to factor into the equation. But for now, obviously the market is a market. If it decides to break this level and move higher, obviously we continue with a short squeeze and we go to new highs. What that catalyst will be, yet to see. Okay, yet to see. Okay, so weekly chart, obviously we're into resistance. Daily chart, horizontal resistance. Okay, so this is a key pivotal area, 6820. So I'm certainly short the FTSE. I've got a FTSE short around 6804. My stop loss is 6833. So we'll see. Mighty close to being stopped out on that. I think when high is 6832. So not too far with regards to being stopped out there. Obviously 6833 is triggered, then the next level obviously we go to is 6875. I'll switch my position if Asian markets are higher overnight and this rally continues. Then I'll certainly look for a bullish bias up to 6875, possibly new highs. Okay, so that's basically where we're sitting on the actual daily chart for the FTSE 100. Now let's just quickly have a glimpse of the FTSE 250 because that's quite pivotal. Okay, so we had a hanging man candle yesterday, and that's where I expected a reversal to come into play. Okay, especially given the fact that the weak jobs report was just a one-off, and a lot of the hawks, a lot of the Fed members have downplayed that that data point. Okay, given the fact that it's an anomaly. Okay, and that they are going to go ahead with tapering. Obviously, if there's no cheap money out there to sustain this rally, then this rally will collapse overnight. Yes, we do have growth, but it's very tepid. Even though the World Bank did raise growth forecasts today. And obviously that did help oil to a certain extent, but still not sufficient enough for the markets to come off the morphine. Okay, so again, it's debatable. At the end of the day, it's a tape, and the market that pays, it's price that pays. So if price action does continue to short squeeze higher, then I must respect it and adjust accordingly. Okay, but for now, I still remain in the bear camp, and I'm still yet to be convinced. Okay, to be honest, still yet to be convinced. Okay, so yes, we had a hanging man. Okay, we have obviously continued higher, so something that I need to watch out for on the daily chart. Weekly chart, obviously we have sustained and moved higher. Really, we are in no man's land at present, really, to be honest. Okay, so there's nothing really that we can benchmark this on, okay, or compare it, because we're in no man's land. Okay, so for now, all I can do is really focus on the smaller time frames with regards to the FTSE 250, and I'll give you an insight with regards to the smaller time frames. Smaller time frames basically have a double top on the FTSE 250, so that's exactly what I'm looking at. Hence the reason why I'm bearish is buy it. I've got a bearish bias. You've got an unfilled gap below, so again, something that I need to keep an eye out for. Going into tomorrow, obviously that's a magnet that needs to be closed on the downside, and obviously you've got double top resistance there as well, so that's something that we focus on. That's why I've got a bearish bias in the FTSE. Now let's have a look at the FTSE 100 itself. Okay, 60-minute chart obviously coincides, or basically the larger time frame takes preference because we are into resistance at 6820 level, although I did expect the 6800 level to be to hold as resistance, but we penetrated that, so again that's something that we'll have to look at later on. Okay, so for now, what do we have here? We're in a bullish channel. Okay, we've got a double top resistance here. We've got potential right shoulder for a HNS. This HNS obviously failed to transpire and we short squeezed higher. Okay, that seems to be a theme in the last 2 days, short squeezes. Okay, and we keep an eye out for that. So HNS formation here, so you got high of around 6825. You've got the neckline around the 6805 level, so 25 points on the downside, or 20 points on the downside. You're looking at 6785 on the downside. So keep an eye out for 6785, 6785. Although you do have key resistance at 6797, so that's something that I'll keep an eye out for. But that obviously is dependent on how Asia reacts. The next level obviously below is the unfilled gap, so looking for this unfilled gap to close tomorrow. This is the key area or zone that I'll be looking at. Okay, so certainly keep an eye out for that. 6760 is the 200 MA, which coincides with the unfilled gap as well. So that's something that I'm certainly keeping an eye out for tomorrow. Okay, so let's see if we can gauge any more clues, okay, from my other variables that I tend to observe. Okay, so let's have a look at the chart of BP and see if we can ascertain or decipher any type of patterns here. Let me just delete all this. This is just part of the mentoring that I tend to go through. Okay, so obviously that gap is there, and that gap will remain as a magnet for price action to be attracted and moved lower. Okay, so basically what do we have here? This is obviously exhaustion, doji, and the markets really have failed to sort of make or sustain a new high. So that's certainly something we'll keep an eye out for. Okay, with regards to that, so definitely indicating some sort of exhaustion there. Okay, again a double top obviously failed to hold. We've even failed to close this gap up here. So a lot of resistance there, okay, for BP, and BP obviously is 10% the FTSE. So if you understand what BP is doing, then you understand what the FTSE is going to do. Now this is one of the patterns that's really concerning me, and this is why I tend to be I'm not convinced yet, because when I see a pattern like this on BP, it doesn't bode well for the FTSE, given the fact that BP is obviously 10% of the FTSE 100 itself. I mean, what do you have here? Left shoulder, the head's in, and then you've got the right shoulder forming. Okay, this is the right shoulder here. Okay, so if you take the head there, take it to the neckline, obviously we've held the 50-61% for the right shoulder, and obviously we're looking to close on the downside. Okay, so this isn't a bullish pattern. This is the concern that I have. So all the bulls out there that are ranting and raving, this is something that I'm looking at as an alternative and saying, okay, if it's bullish, then why do we have this pattern on BP? Okay, understood. So keep an eye out for that. Okay, so alternative, another variable that I tend to follow a lot is Barclays. This I've been bullish on, which everybody knows under the fundamental analysis service. Okay, obviously we've closed the gap today, although I did get out of this long position a bit too early. Managed to get 5% gain on it, which was hunky-dory really, to be honest, and I sort of scaled out okay, above the 285 level. So this is signaling that the FTSE is into resistance. Basically, that's the conclusion that this is coming to. Okay, and the reason why I say that is obviously the inverted head and shoulders. Although the inverted head and shoulders pattern does signal more further upside, but for now we are into resistance, given the fact that we've closed the gap. If we've closed the gap there, then obviously the banking sector should also be coming into resistance. Okay, so that's something that we keep an eye out for. Okay, so if I bring up the banking sector, and as you can see on the daily chart here, that the banking index itself is coming into resistance. So you've got resistance here, horizontal. Okay, so keep an eye out for that. There's a lot of resistance around this zone here and here. Okay, so certainly keep an eye out for that with regards to the banking index. Okay, that's obviously UK banking sector. Obviously we have got unfilled gaps below, so you've got an unfilled gap there that must close, so that's a magnet. Okay, so again, what does it signal? Signals weakness on the FTSE 100, hence the reason why I've got the bearish bias going into tomorrow. Okie dokie, there you go, you've broken the bullish channel, and we're looking to obviously shift and move on to the upside, so move to the downside, sorry. So certainly keep an eye out for that. Okay, that's a pattern. So that's signaling weakness on the FTSE 100 going into tomorrow's trading. Okay, something that we certainly need to keep an eye out for. Okay, doesn't bode well. Doesn't bode well. Okay, so let's have a look at. So we looked at Barclays. There's two key stocks that I generally tend to look at. Let's have a look at BHP Billiton. That's another index that I tend to observe. Okay, so we've obviously moved lower here. Let's just get rid of all this now because obviously it's not relevant anymore. Okay, so we've basically been consolidating within this red candle here. There's the upper body of the red candle. So basically we've been consolidating here and looking for another move lower. Yeah, okay. So there's your bear flag scenario. All this move here has all been inside bars, next move thrust lower. Okay. Why is that thrust lower? The thrust lower is because I've showed you the chart of the US dollar index, and that's signaling further downside or further upside. If that obviously goes higher, commodities move inverse and commodities will move lower. Okay, so certainly bear that in mind. Okay, right, so there's a bear flag formation, so again that doesn't bode well for the FTSE 100. Okay, so it's certainly not boding well. Okay, the next one we look at is Marks and Spencers. That gives us a reflection of the actual retail sector. Now let's see if I can find it. Let's just have a look. 1 second. There we go. There we are. Okay, so Marks and Spencers. Okay, so Marks and Spencers obviously had a nice rally, given the fact that the chap who owns Sports Direct and Newcastle, obviously United, has started to enter the foray or retail space with regards to Debenhams. So that obviously spurred some talk of mergers, acquisitions, potential further deals, etc., etc., and that obviously created a short squeeze for Marks and Spencers. Okay, so we've had quite a substantial move. So if you just take the pivot high there to pivot low there, so you've got a 61% retracement. So again, what's that signaling? It's signaling resistance. If that means resistance, what do you think will happen to the FTSE? Obviously it'll go lower. Okay, so just keep an eye out for that. Okay, so they're key leading stocks that are all signaling downside momentum. Okay, so let's just get that in there. You've got a gap level there that needs to be closed. Okay, so basically you've got this rising wedge pattern, really. What's the best way of describing it? Okay, we've broken that. We're moving to the downside, looking for this gap to close around the 474 level. Once that gap closes, okay, once we've closed that gap, obviously that causes the FTSE to fall because the retail sector will be under pressure, and down we go. Okay, so the four leading variables or equity variables I follow for the FTSE 100 are all signaling downside momentum. That obviously doesn't bode well for the FTSE. Okay, and that's basically how it's working. We're looking for the FTSE 100. So I think I'll call it a wrap there, folks, with regards to the FTSE. So watch out for the just going back to the 10-minute chart, watch out for the HNS formation, looking for the unfilled gap below. So 6765 potential target for tomorrow, 6785 obviously is the HNS target on the downside. Watch out for this key level at 67 or 6700 or 6800, be previous resistance equals support. Okay, and let's see how the Asian markets react overnight. Now the Shanghai index is obviously negative still for the last 2 or 3 days, given the fact that this liquidity concerns and long growth. Obviously that doesn't hence the reason why the Aussie was under pressure overnight and has remained weak all day. So keep an eye out for that. Okay, so risk on, risk off, wax on, wax off. Goodbye now.